the tools that they have to address inflation, and I'm hopeful that maybe some of it's not systemic, that maybe some of it is supply chain. That's the reason for it, and therefore maybe we don't have to. For example, you point out, if you really need to go above the inflation rate to get interest rates above the inflation rate, you'd have to go at this point, if we're, I don't know what you assume where we are, 7 or 8, you'd have to go to 7 or 8 or 9% on interest rates. And if that's your tool to take on inflation, the flip side of that is a sharply slowing economy, and it hurts business development, it hurts entrepreneurs, it hurts established companies that have higher borrowing costs, because they're going to pass that along to consumers who are then once again going to be dealing with that inflation. So it's a tool that I don't even know if it works, but it results in hurting demand and therefore hurting the economy, which is not what we want to do.
Well, my concern is that it hurts supply even more than demand. And the problem is the Federal Reserve is locked into a Keynesian approach. And so from their point of view, the only thing they can do to fight inflation is raise interest rates. But given that I do think this is a lack of supply problem, you have to say, how exactly are higher interest rates going to address that part of the problem? Because if banks charge higher rates, then there are more small businesses and entrepreneurs who might have had the will to increase supply, to produce new goods, who won't have access to capital, who won't be able to start the productive enterprises that would have helped alleviate supply problems. And for the companies that are strong enough to stay in business, even at a higher borrowing rate, they're going to just pass that along as a higher cost of business, which makes the inflation worse. So it's not clear that the Fed's tools are really oriented to fighting the basic cause of this current level of high inflation.
So what type of serendipitous events could result in a successful soft landing? Is it I don't know whether if things all work out, I'm not sure it's because of or in spite of the Federal Reserve. We can still get out of this, or are you very pessimistic that we can get out of, that we can do this without a Volcker-type recession?
Well, I'm always optimistic about the American economy, and I think that it responds well to new developments. I'm not a hawk, I'm not a dove. I've characterized myself as a woodpecker, and I just keep hammering away on this basic notion that the Fed's fundamental responsibility is to uphold the integrity of the dollar. Our money has to provide a meaningful and reliable tool for entrepreneurs. It has to convey price signals accurately. I hope that the Fed will rely much more on shrinking its balance sheet, which would help to make the Fed less of a factor. The day that the Fed quits owning 1/4 of all the debt issued by our government, which reflects deficit spending, that will be a good turnaround. So I hope they'll rely much more on the old school approach of engaging in open market operations. I don't like the idea that they're going to keep paying banks and hedge funds higher rates of return to keep speculative play money locked up from entering the real economy.
Shepard Smith here. Thanks for watching CNBC on YouTube.